Hey, good afternoon. Today is June 6th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got a 21 EMA here in blue, 9 EMA here in cyan, and a 200 EMA in magenta. We additionally have a MACD indicator down here at the bottom, but we primarily focus on using technical analysis, price action, overall market context in order to place our trades. Take a second, real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content. And wow, last week I got very busy. I was unable to post videos. I want to say 3 or 4 days last week. Additionally, I had a very busy weekend because I was out of town, but I'm here today. The rest of this week might be a little bit busy as well. I've got a friend's wedding that's coming up, and there are a lot of things that I need to get done before next weekend. So bear with me. Another busy week, but I'm going to try to post content as much as I can. But all of that information aside, let's get right into it for today, as we normally do in this channel. Drawing a level of resistance up here at the top, level of support down here at the bottom. We had a channel that's moving up, break, move to a new high. Additionally, we started to see prices chopping up a little bit here. Market opens, both 9 EMA, 21 EMA are flat as prices are trying to figure out what to do. You do have a new low here as prices come up. You get a first entry short, prices come up, second entry short. On this bar, as prices try pushing higher, they reverse, close below EMA. I don't even want to mark this as a potential aggressive trade to take. Realistically, at the time, you are in this trading range right here, and it isn't until prices start to push down that you even consider extending the trading range. So I don't want to mark this as a potential trade to take. To be honest, everything was too flat. Once prices start to trend, you get the separation between the 9 EMA, 21 EMA. Additionally, MACD is showing this bearish momentum. Prices found this level of resistance up here at the top, and now we could potentially push back down to the bottom of the range. As prices start to push down a little bit, they come up to test the EMA one more time. You could potentially take a short here, but you're shorting right into the lows of this support. So even this trade would be aggressive. Now, I don't want to confuse people with what I was seeing. I'm going to delete that range. Let me put this back in. So this was really the range that I was looking at. As we started to get this separation between the 9 and 21 EMA, I saw prices start to trend. Started the count from up here. Prices came down and up for a first entry long. And then as prices came down, the short-term trend was in play, looking for a second entry long to trigger. And it triggered actually above this bar here. Now, unfortunately, at the time, my bars were really weird. So I think I was looking at something different. But I ended up taking a short here. Prices ticked down, it looks like one, before reversing back up. Essentially, this was a failed breakout. Prices tried breaking out to the low side before failing and coming back up. Additionally, we're in this uptrend. So I did put a note here, shorting in this uptrend automatically makes it aggressive. My chart was having some issues today with price action. I had bars that looked fairly decent. I was anticipating prices to come back down to the 200 EMA, but didn't get that. Prices ended up stopping me out. Now, when I look back with this set of data, I definitely would not have taken a trade here, but again, in the moment, the bars were telling me something different. So that was definitely a frustrating way to start the morning. Prices come back up and test this resistance level that we have marked. I started to extend this trading range because again, prices are continuing to oscillate. We have a new count up here as prices come down. First entry long by one tick before prices come down, looking for a second entry long to trigger. And once it does, this is an aggressive trade. To be honest, shouldn't even be marked. I marked it aggressive only because I saw it somewhat similar to this one. And so that's why I want to talk about it. Is this previous trade didn't work out, came back up. So as prices are coming down, you don't want to catch stops below here. You are trading directly into the lows of this trading range. And so while it works this time, you do get a scalp if you were to enter this. The point of me marking that was to illustrate sometimes these trades won't work and sometimes they will. So be very cautious about those aggressive trades. Again, shorting in this uptrend automatically made it an aggressive trade anyway. But then at this point, prices are continuing to oscillate up and down. We're definitely in the trading range. And then what do we start to have? Prices start to separate. 9 EMA, 21 EMA are separating. Prices seem to be pushing up, testing these overnight highs that we had, and they push straight through. Based on this count here, we're restarting the count here where prices start to trend. Prices come up down for a first entry short, and prices come all the way up down for a second entry short. You could have an order in place ready to go, but it does take a little bit of time before you'd be in this trade and potentially out for a scalp. The issue is I didn't see it like that. My bars did not look like this. And even if you did have an order ready to go, once you start to see prices stall a little bit, you additionally see MACD losing its momentum. You have to be very careful about keeping your entry order in place. Now, the reason I had this one marked was because this was one continuous uptrend. Prices came down for a first entry short. You had a break of this STT looking for a new high, and the second entry short triggered below this bar. This trade now becomes aggressive. If you're trying to catch stops to go long, yes, you are in an uptrend, and that's being reflected as the 200 EMA is continuing to come up. We are making higher highs, higher lows, but we were in this trading range. STT's working up, break. Once we get that new high, you have to be cautious about continuing to buy because prices could easily tick one up, get you into that trade, and then reverse. Now, in this case, prices had two legs up to a new high before prices started to consolidate back at the 9 EMA and then push back below the 21 EMA. Now, I didn't take these trades, but I did want to talk about them just so people remember these short-term trend rules, they still apply. And once you get that new high of this short-term trend, you have to be cautious about continuing to catch stops to go long. Now, there was a portion of the morning where prices really don't give us anything. They continue to chop up and down. There isn't a lot of separation between the 9 and 21 EMA. We are just chopping along. You got to be very patient. It isn't until this 9 EMA and 21 EMA start to separate we start to get a little bit of movement here. MACD is additionally following with this pickup of bearish momentum, restarting the count up here at the high. Prices come down and up for a first entry long. Prices continue to come down. Up for a second entry long, engulfing bar as prices come back down. You could potentially be in this trade and out for a scalp and even a potential runner. The issue is this 200 EMA had continuously been creeping up on us. And if you wanted to enter short, you'd be entering short directly into this 200 EMA. On the other hand, though, we do have this nice bearish push. All of these bars are pressing lower. All of these bars have bearish momentum. A lot of sellers are coming in. MACD is continuing to build some momentum here. So if you're able to kind of understand that and additionally understand that prices found this level of resistance and are probably trying to push back down to the opposite end of the trading range, you could potentially take that, but that's why I marked it as aggressive. Now, let's say you didn't restart the count here, but you restarted the count here from where the trend started to separate between the 9 and 21 EMA. Prices came down and up for a first entry long, and as prices are coming down, you cut right through this 200 EMA. Where are prices going to go? Most likely they're going to find some support down here. So even if we extended the range here, the support level is down here. You would be trading into support, but you do have room to get out. So as the next bar prints, you got people that are sucked into that trade going long. You put your entry order one tick below this signal bar, and prices stall for just a second before coming down and flushing for a scalp and another potential runner. And as prices continue to push down, I think this short-term trend kind of got messed up a little bit. But prices are holding nicely in the short-term trend. You have a break potentially looking for a new low, but you have the MACD that's starting to cross over. So you have to be very hesitant about continuing to go short. This downtrend has continued to play out. You don't want to be entering after the move has finished. So once prices start to oscillate up and down, come back up to the 21 EMA, you get overlapping bars, trading range starts to develop. You don't want to take any of this. Now, I stopped trading around here, and so I don't really know exactly what happens. But from the looks of it, prices continuing to chop up and down. Now we're starting to get 921 EMA, separation of momentum, new high here, prices come down. First entry long, prices come down. Second entry long that triggers above this bar here, MACD is losing momentum. You could potentially have an order one tick below the signal bar. As prices come down, you'd be in and out for the scalp. So you could potentially enter there. But I was making this video when this trade happened, so unfortunately I missed that. But that's essentially what I saw for today. Definitely had to be patient. Where price is most likely going to go back to the opposite end of this trading range for the day. That's why we draw these overnight lows versus the overnight highs, because we do get a lot of price action in those areas. But anyway, that's going to be it for today's video. I really appreciate everyone that's been watching and that's been showing support. I hope that you guys get something out of it. And until next time, I'll see you later.